Welcome back to XRP Future Finance, your trusted source for the latest XRP news, Ripple developments, and long-term crypto insights. Today we're looking at one of the biggest questions many XRP holders continue to ask. Can XRP realistically reach $100 within the next 5 years? It is a target that gets mentioned often across social media, YouTube, and crypto communities, but how realistic is it when we compare that prediction with actual market data, adoption trends, and Ripple's business expansion? Instead of relying on hype, we're going to break this down using facts, numbers, and real developments that are shaping XRP today. We'll look at what Ripple is building behind the scenes, what could drive XRP higher over the next market cycle, and what challenges could prevent such an aggressive price target from becoming reality. Make sure you stay with us until the end, because one key factor could determine whether XRP becomes one of the biggest winners of the next crypto cycle or continues trading far below the expectations many investors have. When people hear predictions of XRP reaching $100, the number sounds exciting. After all, XRP has produced incredible gains before. It traded for just fractions of a cent in its early years before eventually climbing close to $4 during previous bull markets. Those massive returns are one reason many long-term holders believe another explosive move could happen. However, the situation today is very different from those early years. XRP now has a much larger circulating supply, the crypto market itself has matured, and institutional investors analyze projects very differently than retail traders did several years ago. That means price targets need to be evaluated using realistic financial models rather than emotions. The question isn't whether XRP can continue growing. The real question is whether enough capital, demand, and utility can develop over the next 5 years to justify a valuation that would completely reshape the cryptocurrency industry. To understand why $100 is such a difficult target, we first need to look at market capitalization. If XRP were trading around $100 per token with its expected circulating supply, its total value would approach roughly $7 trillion. That number is larger than the entire cryptocurrency market has ever been during previous cycles. It would also exceed the peak valuation of any digital asset in history by a very large margin. This doesn't automatically make it impossible because markets can always grow over time, but it does mean XRP would need an extraordinary combination of global adoption, institutional demand, regulatory clarity, and widespread use that goes far beyond what exists today. Investors sometimes focus only on the token price, while forgetting that market capitalization provides a much better picture of what the market is actually valuing. That doesn't mean Ripple hasn't been making impressive progress. In fact, over the last several years, the company has quietly expanded into areas that many traditional financial institutions have spent decades building. Ripple now operates payment corridors across more than 90 countries and continues strengthening relationships with banks, financial companies, and payment providers around the world. Rather than simply marketing blockchain technology, Ripple has been working to integrate its infrastructure into real financial systems. This strategy has positioned the company as one of the most established blockchain firms serving enterprise clients. The growth of Ripple as a business has become increasingly difficult to ignore, and many investors naturally wonder whether that corporate success will eventually translate into significantly higher demand for XRP itself. One of the biggest milestones came as Ripple continued moving closer toward operating like a regulated financial institution inside the United States. The company's efforts to obtain regulatory approvals, expand banking capabilities, and strengthen its financial services have increased confidence among many institutional observers. At the same time, Ripple Prime has continued expanding its presence within financial infrastructure connected to traditional markets. These developments show that Ripple's ambitions go well beyond cryptocurrency trading. The company appears focused on becoming part of the broader financial ecosystem where banks, asset managers, and payment providers operate every day. That long-term strategy could become increasingly important as blockchain technology continues moving into mainstream finance over the coming decade. The XRP Ledger has also experienced significant growth beyond simple token transfers. Real-world asset tokenization has become one of the fastest-growing sectors within blockchain technology, and Ripple has been positioning its network to benefit from this trend. Assets such as bonds, funds, and other financial products are increasingly being represented digitally on blockchain networks. Reports show that the value of tokenized assets connected to the XRP Ledger has grown dramatically over the past year, while transaction activity has also increased substantially. Higher transaction volume demonstrates that the network is being used more actively, which strengthens the overall ecosystem. Although this growth does not automatically guarantee higher XRP prices, expanding network activity creates a stronger foundation that could support increased adoption over the long term. Another important development has been the expansion of Ripple's stablecoin ecosystem through RLUSD. Stablecoins continue attracting significant institutional attention because they combine blockchain efficiency with price stability. RLUSD has grown rapidly since launch, and much of its activity takes place directly on the XRP Ledger. Every transaction processed on the ledger requires a very small amount of XRP to function, meaning greater network usage creates incremental demand for the ecosystem. Ripple has also invested billions of dollars acquiring companies that strengthen its financial services platform, including businesses involved in treasury management and institutional brokerage. These acquisitions show that Ripple is building an extensive financial infrastructure rather than depending on a single product for future growth. However, this is where one of the biggest debates surrounding XRP begins. Ripple's business success does not automatically guarantee massive appreciation for the XRP token. Many of Ripple's services generate revenue, regardless of whether customers actually use XRP during transactions. Banks can benefit from Ripple's payment software while avoiding direct exposure to cryptocurrency volatility. Likewise, the company's banking initiatives and stablecoin operations can continue expanding even if XRP itself plays only a limited role. This distinction is critical because investors often assume Ripple's growth and XRP's price are perfectly connected. In reality, the relationship is more complicated. For XRP to experience truly extraordinary gains, more institutions would likely need to settle transactions directly using the token, rather than simply using Ripple's surrounding technology. Looking ahead, several catalysts could significantly influence XRP over the next 5 years. Regulatory clarity remains near the top of that list. Proposed legislation designed to create clearer rules for digital assets could reduce uncertainty that has affected institutional participation for years. If major financial firms become more comfortable investing in XRP through regulated products such as exchange-traded funds, new capital could enter the market. Institutional investment tends to be much larger than retail participation, meaning even moderate increases in professional allocation could have meaningful effects on price. While predicting exact investment flows is impossible, clearer regulations generally improve confidence across financial markets and could create a more favorable environment for XRP. Ripple is also pursuing additional integration with traditional financial infrastructure that could expand its influence within global markets. Continued progress involving payment systems, financial institutions, and tokenized assets may increase Ripple's relevance across Wall Street and international finance. Meanwhile, blockchain adoption continues spreading beyond cryptocurrencies into banking, securities, and cross-border settlement. If Ripple successfully positions itself within these emerging financial systems, the company's network could become significantly more valuable over time. The key question remains whether XRP itself becomes central to those operations, or whether the surrounding infrastructure captures most of the economic value without requiring substantial demand for the token. Another event many analysts are watching is the next Bitcoin halving expected in 2028. Historically, Bitcoin halvings have reduced new supply entering the market and have often been followed by strong cryptocurrency bull markets. Although past performance never guarantees future results, previous cycles have generally created favorable conditions across the broader digital asset industry. XRP has historically performed well during late stages of major crypto bull runs, meaning the period following the next halving could become one of the most important windows for long-term holders. If institutional adoption, regulatory clarity, and favorable market conditions align during the same cycle, XRP could have an opportunity to establish new all-time highs beyond previous records. Some financial institutions have published long-term projections suggesting XRP could experience meaningful appreciation throughout the remainder of this decade. Certain optimistic forecasts place XRP in the high single digits or even above $20 before 2030 if adoption continues accelerating and institutional demand expands steadily. These projections assume Ripple's payment network grows substantially, tokenization continues expanding, and regulated investment products attract increasing amounts of capital. While these estimates are considerably lower than $100, they still represent significant upside from current price levels. It's important to remember that institutional forecasts are scenarios rather than guarantees, and actual market performance can differ considerably depending on economic conditions and technological adoption. Despite these positive developments, several risks cannot be ignored. One major concern is that Ripple can continue succeeding as a company even if XRP adoption remains relatively limited. Many institutions within Ripple's network primarily use the company's software solutions rather than settling payments directly with XRP. If that trend continues, Ripple may generate increasing revenue without creating enough sustained buying pressure to support extremely high token valuations. Investors should understand this difference because owning XRP is not exactly the same as owning shares in Ripple. The company's commercial success and the token's market performance are connected, but they are not identical. Supply dynamics also remain an important consideration. XRP has a much larger token supply than many cryptocurrencies, and although Ripple continues managing escrow releases carefully, the circulating supply gradually increases over time. A larger supply means substantially more capital is required to move prices dramatically higher. Reaching $100 would require demand strong enough to support one of the largest asset valuations ever recorded. At the same time, competition continues increasing. Stablecoins are becoming more widely used for international transfers, while central banks are exploring their own digital currencies. If financial institutions ultimately choose alternative settlement methods instead of bridge assets like XRP, the token's long-term growth potential could face additional challenges despite Ripple's continued business expansion. So, where does that leave investors asking whether XRP can realistically reach $100 by 2031? Based on today's available information, that target appears highly ambitious and significantly beyond most respected long-term forecasts. That doesn't mean XRP lacks potential. On the contrary, many analysts believe strong returns remain possible if favorable regulations emerge, institutional adoption accelerates, Ripple continues expanding globally, and the next crypto market cycle develops similarly to previous ones. Price ranges around $8 to $15 over the next 5 years are viewed by many observers as considerably more achievable under optimistic conditions, while even higher levels would likely require direct institutional use of XRP itself on a much larger scale than we see today. Ultimately, Ripple's future looks increasingly promising, but the biggest unanswered question remains whether the company's expanding success will fully translate into demand for the XRP token. That's the factor every long-term investor should continue watching as the next 5 years unfold. If you enjoyed this analysis, be sure to subscribe to XRP Future Finance for more fact-based XRP coverage, and let us know in the comments where you believe XRP could realistically trade by the end of this decade.